I think we got some numbers, $9.3 gross refining margins. That would be really out of the blue, actually. The most positive number that I think Mehul would be among the most positive ones, $8.7. Our poll was $8.6, and they've actually reported about $9.3 per barrel. I mean, I don't know how this would actually translate into refining business. There's a good chance that if you just extrapolate that, the net profit this time around could actually surprise on the positive side by a big margin, especially given that there's a word that maybe petchem also won't be as disappointing as our poll is indicating. Mehul, a word on this GRM, $9.3.
Yeah, I think that's certainly very positive. As you rightly pointed out, at $8.7, that means about $0.6 extra compared to what we were expecting. That is certainly a positive surprise. As we explained, we did not believe that the shutdown would have materially impacted the volumes. On the downstream front, they could have continued the operations, just the shutdown would have been on some parts of the refinery, and that need not have impacted their overall volume. So we do not expect volume impact, and if there is no volume impact and GRMs are positively, obviously the EBITDA at refining will be stronger than our expectation.
Prakash, how big is this a surprise, and can this lead to a bit of minor re-rating? I mean, if we're awaiting the main numbers, but $9.3 would be a big positive.
Yeah, absolutely. I mean, as I said, I was also expected closer to 9 because the beginning of the quarter they had some very good pricing that was factored in, particularly from the heavier oil. But what it could do is if the EBITDA from refining goes beyond 8,000 crores, it catapults Reliance into a new band.
Okay, just hold on, Prakash. I'm sorry, because I got the full numbers now from Reliance, and you would have the number flashing on your screen. I'm just opening the PDF copy. It's taking a bit of time. Okay, the net profit 5631 crores of net profit, which is almost in line with our poll of 5,655 crores. Let me just do one thing. I'll just send these numbers to my flashes team so that they can flash all the numbers. So that's the first number that we have, 5,631 crores versus our estimate of 5,655 crores. This is actually in line with estimate because estimate was 5,655. The previous quarter-on-quarter comparison was 5,510 crores. So that's the first number on the screen. Of course, we've spoken about the GRMs. Let's talk about some other numbers for the quarter. Okay, let me just talk about the sectoral performance. Okay, I got the sectoral performance. Yeah, okay, so let's start with the oil and gas. Actually, oil and gas EBIT is 378 crores. That's where the disappointment has come, in the sense that if you're wondering that despite this gross refining margin of about $9.6, why has the net profit number disappointed? That's because almost all the analysts were working with a number of almost 500 crore for oil and gas. That hasn't happened. It's come in at 378 crores. The poll was around 550 crores or so. So that's about almost 175 crore lower than that. So that would have actually, put some pressure on the overall numbers. Let me also tell you what the refining and petchem side of the business has done. Do we have details on that? Yes, we have. For refining, it's coming at 3,950 crores. Is that the number that I'm reading right? That would be huge. That's actually huge. Yeah, 3,950 crores because our poll was 3,600 crores. So that's where the 300 crore uptick has come. That really is a big surprise. 3,950 crores on refining. It will flash on your screen soon. The refining performance of 3,950 crores. Petchem 2,096 crores, which is absolutely flat, I think. So 2,124 is what they did last time around. 2,096 crores. That's a drop of only about 1% quarter on quarter. So that is really the number that quite clearly has surprised on the positive side. So net, let's go through the numbers. What's essentially happened is that refining has surprised on the positive side. You have a big jump in gross refining margins. That's translated into a big jump in terms of refining EBIT performance, 3,950 crores versus our poll of about 3,600 crores. On the other hand, the petchem, which was expected to come down a bit, has come down but not by as much margin as analysts were expecting. It's come down only about 1% or so. But the slight drop is in terms of oil and gas business, which has come down to about 378 crores. What that also means is, let me watch out for the other income, because that would also be interesting in case of Reliance. Other income is almost as important as any other number. Other income has come in at 2,000 crores versus 2,300 crores quarter on quarter. So that's also an important number for Reliance. Quarter on quarter, other income of 2,036 crores versus 2,300 crores. So in terms of the treasury operations as well, they would have not been able to repeat the kind of performance that they did last time around. Suffice to say, this is operationally a very strong number. You can't have two words about that, because petchem quite clearly has outperformed in terms of our poll, and we have refining, which is quite clearly outperformed by a big margin. Prakash, first thoughts?
I think brilliant. I mean, the refining part has definitely, it's not just a decent surprise, it's a very, very significant surprise. And you know what doesn't worry me is that if E&Ps come down from 540 or whatever we were expecting to 378, it's not going to contribute so significantly negatively to the overall EBITDA. And we are not relying on other income unlike last couple of quarters. So it's great operationally, and as I said, the stock has to react to this positively.
Okay. Mehul, your word on these numbers. Do you think these numbers have the potential to move the stock Monday morning?
Yeah, I think, yes, the numbers are stronger than what was expected, certainly operationally very strong. But I would be, the stock has run up significantly over the last 1 month or so. And therefore, I would be looking at a marginal improvement from here, not a very strong outperformance from here for the stock.
Just a word on refining itself, Mehul. We saw the GRM number, and now we have the EBIT performance, which has clearly beaten the estimate. At least it's beaten my poll estimate by a good 300 crores.
Yeah, so basically about $0.6, $0.7 additional GRM compared to my estimate that they reported resulted into that 300, 400 crores extra. That's the exact number that one should look for. Almost some $80, $90 million extra income comes in when you have about $0.7 additional GRM. So that is perfectly in line. I don't think volume, based on this number, the EBIT number that we spoke about, I don't see volume having been much impacted as I was expecting. So certainly stronger than our estimate by about 300, 350 crores, as you pointed out. This was, yes, the E&P is the number which surprised on the negative side. We'll need to probably speak with the management to understand why, whether production was there and there was a reduction in sale or whatever. We need to understand that, otherwise it should not have surprised this negatively. On a net basis, 350 crores positive, offset by about 150 crores negative. So about 200 crores positive compared to my estimate at EBIT level is what I would look at from here. Of course, this was offset to a large extent by the other income. As you rightly said, 2,300 crores falling to about 2,000 odd crores. So that 200 crore additional other income is something which went off from our number, and therefore at PAT level they were almost close to our numbers. Now coming to why the other income has fallen, I think one of the significant aspects could be the capex that is being incurred for the expansion. And therefore there could be a reduction in the cash balance also for the company, which is why probably the interest income would have possibly come down. We need to speak with the management on that.